Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, May 23rd, right at the market's close. Now, before we get started, please know that all of us at ToniTurner.com wish you and yours a wonderful Memorial Day weekend. We honor our fallen military and pray for their families during this holiday. God bless. And now, on to the market. Wall Street's main index has pulled back today after President Trump recommended 50% tariffs on the European Union and advised Apple it would have to pay tariffs if iPhones were not manufactured in the United States. In more positive news, sales of new U.S. single-family homes unexpectedly increased in April as builders lowered prices to lure buyers. The Commerce Department Census Bureau said this morning that new home sales jumped, or I should say surged, 10.9% to a seasonally adjusted annual rate of 743,000 units last month. So that's good. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, as you can see by this chart today, the SPY closed today at $579.11, or about $57.91 on the S&P 500 itself, and this is about 6% below its recent all-time closing high on February 19th at $612.93 back here. So we can see now that the SPY is sitting right on top of this black line, which is the 200-day moving average. That's coming in here at $575.75, and the SPY is sitting right on top of it. It's still above the 20-day moving average, the red line, which is coming in at $573.63, and of course still above the 50-day moving average, which is now at $556.77. We can call that 567 if we want to round it off. Now, we know that since the April 7th low down here, everybody made the April 7th low, and that was at $481.80. The SPY shot up in this extremely strong uptrend, and this right here, from down here to up here, was a nice 23% gain. So we can't complain about that. Now, if we look back here at the all-time closing high again on the February 19th high at $612.93, we know that the SPY rolled over here, and it fell down here to the March 13th low down here at $549.68. Then it rallied back up and tried to get over the 200-day moving average, but couldn't do it. Tried to hold at 560, but couldn't. And then fell down to this April 7th low that we all know so well. Again, that was at $481.80. Then it bounced dramatically, like most everybody did, up to, on April 9th, to $548.62, then pulled back to $508, then rallied all the way up here, just this really steep uptrend we see, all the way up. 595 this was the last recent high, and then again slipped down to where we are now at about 579. So if we sit back a little bit and look at this, we can see that that actually on a larger level, the SPY here has formed the most dramatic cup with a handle I've ever probably seen. And we can almost use this 200-day moving average as a top to this cup with a handle. There's a couple little patterns here, so it is bullish. It did break out above this line, the 200-day moving average, and in this pattern. And of course, a cup with a handle is a bullish pattern. It's actually considered many times as a trend reversal, meaning a downtrend reversal pattern. But again, this is extremely dramatic, and it's very steep. It's very steep. But anyway, we did it, and So right now, we're looking at, so where does it go from here? What happens next week? Well, we see up here, we know that we have potential price resistance at 5 from back here from 595 all the way back here at 597. That's potential price resistance from February. And then, of course, there's resistance on up here at the 612, up to the $612, $613 level. As far as potential support goes, we know, again, that we have it right here at the 200-day moving average coming in at 575 right here. That's potential price support. Of course, the 20 days coming in here, we're going to call it 576, so that adds a little more. Plus, we have this 560 here, potential. No, that's down. I'm sorry, that's down lower here. This is up around 575 price support as well as moving average support. Then we have the 50-day moving average coming in here at 556, and we have this pivot here coming in all the way across at about 555, right about that, 555. So a lot of potential support here. And then, of course, we head down here to 508 and down to 581.80, 582 we can call it. That's potential. So we can see here, again, we know this is it's a strong uptrend. It's a steep one. Sometimes that kind of makes one think that we may need to soften up a little bit here, but the way the market's been acting, I'm certainly not going to make any guesses on that one. So in the next week or so, after such a steep run up, if the SPY softens again, the line I'm going to watch here, my line in the sand, is going to be the 50-day moving average, again at 556. I'd like it to stay above that, considering all the price support it has in conjunction with that. So as always, trade wisely and keep track of your protective stops. The next chart we look at today is the daily chart of the Invesco QQQ, simple QQQ. Of course, this is the ETF that follows the NASDAQ 100 index, the top 100 non-financial stocks in the NASDAQ stock market, including the Magnificent Seven, the big guys like NVIDIA, Meta, Alphabet, Tesla, that whole group. Now, the Qs closed today at $509.29, and this is just 5% below the all-time closing high back here February 19th at $539.52. So we look at this chart today and we see that it did gap down from last night's close, and that's fine. So did the SPY. It is trading now above the 20-day moving average, which just crossed up above the 200-day. So the red line here is coming up at $499.11. Then we have the 50-day moving average coming in here at $477.05. And right in between the 200-day, the obstinate 200-day moving average is coming in here at about 494. So since the Qs made that all-time closing high in February back here at 539.52, we know that it rolled over just like the SPY and dropped to the March 13th low at 466, then rallied back up to the 200-day, kind of like the SPY did, and here at 494. Couldn't get over it. This 200-day can be a tough dude when it wants to be. Then fell down on April 7th, down here to $402.39. That was the April low everybody had. Then bounced on April 9th up here to 468, hit its head on the 20-day moving average, and then pulled back here to 428, then climbed up to the May 19th high right here. That May 19th high was at 522 right here, then pulled back again to where we are now at $509.24. So if we look at this chart going into next week, we're going to say, well, we've got potential resistance here, price resistance at 522. And if we drew this line back to the chart, we can see that in February it also had potential. What was support is now resistance, potential price resistance back here in February. And of course, then we can go up to the highs here at 539, 540 potential resistance. We have potential support here at 499 on the 20-day moving average, down to 494. So this is all pretty much potential support on the 50-day moving, on the 200-day moving average. And of course, we have that here from this pivot here back in March as well. That counts. Then we have the 50-day coming in here again as potential support at 477 at the moment, and again this March low at 466. That's a pivot. So all along here, all along here. Then of course and on down. Now we noted last week that the Qs are overbought or were overbought in the short term by looking at the 14-day RSI, and noted that it was up here hugging this line at 70. 70 is the top of the RSI where it has to roll over, usually rolls over. This doesn't happen usually in a day or two. It takes a little while. But anyway, that overbought reading has softened a tiny bit. We do have an even steeper angle with the Qs than the SPY has, moving higher. So that's always, to me, I've seen the steeper they go, sometimes more profit taking comes in. That makes perfect sense. People have made a lot of money. Traders have made a lot of money, or even investors, and they want to take some profits. So that could be. But we can't say it is bullish, that's for sure. So going into next week, again, I'm going to keep an eye on my protective stops, and I'm sure you will too. Our last chart today is a daily chart of the Global X FINX ETF, the symbol FINX. I'm just going to call it the FINX for this session. It has 62 holdings in it. Top holdings are Fidelity National, Intuit, PayPal, Coinbase, and Fiserv. And I always give you the top 4 or 5 stocks in all of these ETFs because maybe you want to look at them individually as well. So, and of course, you can always go into the Global X funds and look up the FINX and certainly other ETFs and check out their holdings. Sometimes that's fun to do. So, in the long term, and I always look at a long-term chart, as you remember, before I close in on one of these. So you can't see it here, but on a long-term chart, like on a monthly chart, I see that the FINX started trading it started trading in 2016 at about $15. It gradually rose from there up to 2021 highs at $53. After it reached that 52 level, it fell to lows in November of 2023 to $18, and from there it rose to December 2024 highs, and we can see that on this chart. If you look left with me up on this screen, you'll see that the December 2024 highs came in here at $34.42. Now, since then, the FINX started to fall down a little bit, came down to not quite 30 here in January, rose up, fought its way back up above the 20-day, then the 50-day moving average up here to almost 33, tried but couldn't do it, and then rolled over and came back down here through the 20-day, the 50-day moving averages, fell to March lows. Everybody had March lows here at about 27, then it rallied up to the 200-day moving average, got over the 20-day but couldn't stay over the 200 and fell down here to the April 7th lows, which of course was something that happened to just about everybody. and that came down here to, or I should say every stock and index, came down here to $23.49, the April lows. Now, it immediately rallied from there, back through the 20-day moving average, back through the 50-day moving average, and it moved at a gradual pace here, but moved back up to kind of where we are now, again at $30.17. So after it came up here, as you can see, to almost 31, then it pulled back to the 200-day where we are now. And of course, most stocks and ETFs have pulled back a tiny bit here in the last few days, which makes sense. Nothing certainly goes up forever. So here we are again at $30.17. So it's still above its 200-day moving average, and again, slightly above its 20-day and a little more above its 50-day. In the coming week, if the FINX, if the FINX can stay above the 50-day moving average, that's the green moving average here. If it can stay above the 50-day moving average, coming in at $28.27, just round it off to 28 if you want. If it can stay above that, and if the market is behaving positively, I will buy a small position in my trading portfolio, and I'm going to put my stop down here at 27.50 right here. And if you look left on the chart here, that is also correlated with that low there in March. So that was about 27. That's where I want to put my stop here. I'm going to put it at 27.50. I'm not going to give it a lot of room, but I'll give it a little bit in case we get a little more softening next week. Now, if and when the FinTech closes above 31, if I can draw a straight line here. Anyway, when and if it closes above 31, I will add to my position, and by then my stop will be a trailing stop. So you may want to keep an eye on the FINX in the coming week. And now, please know that at ToniTurner.com, we've lowered all of the prices of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, How to Bottom Fish Like a Pro, which is right here, I will show you how to detect with high probability when a stock or ETF is just about to wake up from an extended downtrend and finally take off again. You'll learn how to buy low and sell high and do it over and over again. Our new low price for this program is only $199. And by the way, some of my trainings in this are priced at only $59, so you may want to check them out. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. So from our ever-popular 7 steps to successful trading, down to how to swing trade successfully, one of the most popular programs, how to trade the trend to profits, one of my favorites, how to read charts, great for novices and those who want to brush up, 3 winning setups, great for short-term traders, and again, how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Happy Memorial Day. Keep green on your screen. I'm Toni Turner, and this is The Market Now.